Let's be real. The dream of owning a home, it often feels impossible, right? And usually it comes down to one big thing, that giant pile of cash for a down payment. But what if there was a way to shrink that pile down to something manageable? Well, there might be. Today we're diving into the Fannie Mae HomeReady mortgage, a program that's built to do exactly that.
So before we get into the solution, let's really zero in on the problem itself. It's what I like to call the down payment problem. And honestly, it's the biggest hurdle for almost everyone trying to buy a home.
So I have to ask, does saving up for a 20% down payment just feel completely out of reach? Like an impossible goal? If you're nodding your head right now, trust me, you are not alone. For so many people, that 20% number feels more like a fantasy than a financial plan.
Okay, take a look at this. This chart just lays it all out, plain and simple. That big bar, that's your traditional 20% down payment on a typical house. It's a lot of money, a huge amount of cash. Now, look at that little bar right next to it. That's just 3%. The difference is just, wow, it's night and day. And that gap right there is why so many of us are stuck renting. So the big question is, how on earth do you get from that huge bar to that tiny one? How do you bridge that gap? Well, that's exactly where this program steps in. It's time to introduce the solution we've been hinting at, the HomeReady mortgage.
All right, so what exactly is this thing? In a nutshell, HomeReady is a special loan program from Fannie Mae. It was created for one specific reason, to help folks with low to moderate incomes buy a home. And it does that by offering a really low down payment and way more flexible rules than you'd find with a typical mortgage.
Okay, that all sounds fantastic, right? But the devil's in the details. Who actually qualifies? Who is this program really for? Let's get practical and unlock who can actually use it.
All right, let's break down the checklist. First off, this is really aimed at people with low to moderate incomes. The rule of thumb is your income needs to be at or below 80% of the area median income. Next up, credit score. You need at least a 620 to get in the door, but if you're rocking a 680 or higher, you'll probably get a better rate. And here are a couple of really cool points. It's not just for first-timers. Repeat home buyers can use it too. And you can even use it for refinancing your current home. Pretty flexible, right?
So we know who can get it, but what makes it so good? What are the big selling points? Let's dive into the key advantages because this is where it gets really interesting.
And here it is, the big one, the main event, just 3%. That's the minimum down payment. Think back to that chart we just looked at. That's the number that makes it all possible. 3% can literally shave years, maybe even a decade off your saving time. It puts that dream of owning a home right back on the table, much faster.
And get this, it gets even better. That 3% doesn't all have to come out of your own pocket. The program is super flexible here. You can use money from gifts, say from your parents, or from grants, or even from these things called community seconds mortgages. Seriously, this is a game changer for a lot of people.
And wait, there's more. Fannie Mae recently added another little bonus. If you're a very low-income borrower, and that means you're making 50% or less of the area median income, you could get a $2,500 credit to help with your down payment. Now, there is a deadline on this. It's for loans purchased by late February 2025, but hey, that's a direct shot of cash for the people who could use it the most.
The perks just keep coming. Your mortgage insurance costs are actually lower with this program, which means a smaller monthly payment. And really importantly, you can get rid of that mortgage insurance altogether once you hit 20% equity in your home. Plus, they let non-occupant co-borrowers like your parents help you out on the loan. And this is a big one, if you have a duplex or a room you plan to rent out, you can use that potential rental income to help you qualify for the loan in the first place.
Okay, but it can't all be perfect, right? To be fair, we have to look at the other side of the coin. Every loan program has its limits and its rules, so let's get into a quick reality check.
So the biggest catch is probably the loan limit, how much you can actually borrow. HomeReady has to follow what are called conforming loan limits. For 2024, that's generally a max of $766,550 in most of the U.S. Now, in certain high-cost areas, that number jumps up to over $1.1 million. But here's the thing, in some of the most expensive cities in the country, even that higher limit might not be enough to buy the kind of home you're looking for.
And this leads to some really important advice, for any mortgage, really. Just because the bank says you can borrow a certain amount doesn't always mean you should. It is so important to look at your own budget, your real-life expenses, and make sure that monthly payment is something you can actually handle without being stressed all the time. What you qualify for on paper and what you can comfortably afford can be two very different things. All right, so we've looked at the good, we've looked at the limitations. Let's wrap this up. What's the final verdict? Could this actually be your path to owning a home?
Here's the big takeaway. The HomeReady mortgage is, without a doubt, a powerful tool. It's designed to smash that down payment barrier. But, it's not a one-size-fits-all solution. It's really targeted for a specific group of people, those with low to moderate incomes, and you have to be able to work within those loan limits.
So, I'll leave you with this question to think about. Now that you know the rules, the amazing benefits, and the reality of the limits, could the HomeReady mortgage be the key you've been looking for? Could this be the thing that finally unlocks the door to your very first home? It's definitely something to look into.